Good day, folks. Welcome to the discussion on free cash flow for Management Accounting, Accounting 103. What is free cash flow? Well, in a very simple way, free cash flow is the amount of cash available for distribution to investors. Investors in the very broad sense of the word. That includes stockholders and debt holders after making necessary adjustments for investments to support operations, the ongoing business. And the fundamental value of any firm depends on its expected future cash flow. It also is the lifeblood of the firm. A firm cannot grow, cannot be sustainable if it's not generating cash. So with that given, there are 5 uses for free cash flow. 1, pay interest on debt. 2, pay back principal on debt. Both of these are returns to investors that are debt investors in the company. The third is to pay dividends to shareholders. 4th, buy back stock, which we've seen a lot of. Buy back non-operating assets, such as marketable securities. Okay? So these are the 5 uses of free cash flow. So each company needs to engage in these to produce a return for the investors, whether that be the repayment and interest on debt, to pay dividends, buy back stock, shareholder related. And shareholders are looking for a return on their investment. So we need to be able to generate that cash from that. Then to buy non-operating assets is how we're managing the cash we have. Are we waiting for an opportunity? Do we have marketable securities that are out there to allow us to take advantage of opportunities? Why aren't we putting it back? Why aren't we using it for debt? Why aren't we returning it to the shareholders? One of the things we've seen over the past few years is the buyback of stock. Companies are looking to buy back their own stock because they think the market price of that stock is undervalued versus the capacity. You could also look at it that they see buying their stock back more useful than building the business. Is that a long-term strategy? Probably not. Okay? But we got to understand why we use it. In management accounting, what we're doing is we're computing this information and we use it in the planning process. We want to make sure we can plan to pay back our debt. Do we need to borrow more money if we don't have it? Okay, so these are all involved in developing strategies, and management accountants are very much involved in that. Free cash flow, we're going to really focus on what is referred to as simple free cash flow. Based on what we already discussed, this information can be obtained from the cash flow statement. Now, we're looking at it as it's already happened, the underlying accounting, and we're using that for management purposes and for external users of financial statements. So it's pretty straightforward. Free cash flow equals cash flow from operating activities less capital expenditures. Let's take a look now at, let's take an example and look at AutoZone, which we have been looking at. So we are going to start by bringing up the cash flow statement, okay, and what we're going to start with is cash flow from operations. So if we just go right in here, we can see that that's where that number comes from. Notice I reverse them, going from oldest to newest, because generally I'm going to use this information for planning and I'm going to be forecasting, so you're going to look at trends would go from left to right. So we find that's where it comes from. There's the 2,128,000. Next one is less capital expenditures. Right here, if we look, there it is. And it goes right here, here, and here. So what's left over is simple free cash flow. And that free cash flow is what can we use it for? We can use it to reduce debt, and we can use it to return to shareholders, or if we're not sure, we hold it in marketable securities. So if you look in 2019, $1,632,000,000, what did they do with it? So if we're looking here, the biggest thing that they did in this year is they purchased treasury stock, $2 billion. So what they did is they used all of their cash and more to return to shareholders. So if we look here, they actually borrowed money, okay, which has a long-term interest expense, to pay back to shareholders. So shareholders not only got back the free cash flow, the company borrowed money to return to shareholders. These become, I think we start looking at them, becomes a bigger deal over time, especially if a company is not generating as much cash flow as it had in the past. Now, AutoZone, we know as a result of COVID-19, hasn't been hurt that much. They've had incremental expenses, but they still have their sales continuing. So this is an example of it. Somebody's got to prepare this. I think if we sometimes look at it from the output, we can better understand what we need to do. And this is forecasting, looking forward, which is what management accountants do. If we go over to Heineken, they actually disclose that for us. And sometimes we'll see things in different formats. They start with cash flow from operations before working capital. Then they show you the working capital. That's the same thing that we're doing, just shown a little differently. Capital expenditures, okay, free operating cash flow. So as long as the company is generating free cash flow, we're looking for what are the trends in that from an analytical perspective. But as I'm planning, what am I going to, if you think about this, we're going to get to capital planning. We're going to get to planning capital expenditures and evaluation of projects. You need to know what your free operating cash flow is so you can plan. So here's an example of Heineken. They come right up and we see that. And we're going to see that in a lot of financial statements as you go forward in life. Here's one, not as good. This is from Southwest Airlines, and it's for the 3 months ended 2019. And as we can see, they had a loss, 94, and their free cash flow from operations, net cash flow from operations, was $377 million loss. In other words, in the first 3 months, that operations didn't generate cash, but it needed to use cash. Now, what we'll see is that when the June 30th numbers come out, that this number has grown even larger. So we have that here. We put that right here. And if we notice, they still made capital expenditures, 224. So there's our 224. And when we look at it, it's a negative simple free cash flow, 601. And simple free cash flow for the quarter, when we annualize it, is 2.4. So when we look at this, we're starting to see they got problems. They're not generating sufficient cash for shareholders to repay debt. Free cash flow applications, again, what can we do with it? We either reinvest it for firm growth, acquisitions, return to shareholders, is cash dividends, share repurchases, debt reduction. So that's how we use it. And if we work backwards, this is an example, is that if we start over here, growth in earnings, we see that. These are the things that need to happen for this. So we need to see sales growing, our margins improve, and improved working capital. And to do these things, these are the things that the company needs to do. So it's all tied together back to the business. What is it? And management accounting is speaking in the language of the business, we need to understand them. There's a number of methods of computing free cash flow. You'll see them all. We're going to focus on simple free cash flow, but there's a couple of others. Free cash flow to the firm. That's cash flow available to the company's suppliers. That starts with the same cash flow from operations, less capital expenditure and working capital. So this is the same thing, except this does adjust for interest expense. These are fine tunings that can be used. You should know that they exist. Anything I would expect from you would be simple free cash flow. We also have free cash flow to the firm, which is after all borrowing costs have been paid. Okay? And that means that the free cash flow available to the shareholders, that becomes a simpler number, but they're all derivations of that. I've put on a couple of videos for more insight for you to help you give an understanding. Don't forget, cash is the lifeblood of an organization. If you have any questions, please let me know.